Hello traders, today is the 2nd of September 2013 and the time in London is 46 minutes past 7 p.m. in London and 46 minutes past 2 p.m. in New York. Happy trading to you all. The title of this video is New Market Geometry by Stochastic-MACD. New Market Geometry by Stochastic-MACD. Alright, we're going to discuss a market geometry. Alright, so when you are at school, you were learning geometry, drawing lines. Alright, so we're going to discuss market geometry. What is a market geometry? How can we use market geometry? But the focus of this video is a new market geometry that we have developed at stochastic-macd.com. Alright, a market geometry is about using lines, drawing lines, shapes, triangle, different forms to make trading decisions. Alright, this is a technical trading, a different type of technical trading, an advanced technical trading methods that traders are using, talking about market geometry. But in this video, we're going to talk about a diagonal move, a vertical move, a retracement of the opposite diagonal. Traders that are following us for a long time will already know what we are about to talk about, but I invite these traders to stay with us and to follow me carefully. Alright, and I'm going to show you something very important here, so stay with us. Alright, and I will keep the video very short. Let's get started. Alright, market geometry by Stochastic-MACD is a new form of trading. Now when we are talking about market geometry, we want to focus on the market principle, talking about the diagonal move, vertical move, retracement to the opposite diagonal is our free proprietary trading, alright, at stochastic-macd.com. And what we have noticed that the normal progression of a financial instrument is diagonal. Alright, so I want to explain it to you here. Alright, pay attention very carefully. Alright, and I want today to focus on the market principle that we are using here. The price does not go vertical, or the normal progression of a financial instrument is diagonal. Alright, a vertical move is a distortion to a certain degree, except in the third Elliott wave. I don't want the video to be too long, and I will keep it very simple. Alright, so stay with us. You see here the price went up. You see how the price went up? It went up in a diagonal move. The price did not go up like this. Alright, it didn't just go up from here in a vertical move, from here straight away up to this level. This is abnormal progression. Alright, the normal progression is diagonal. This is a powerful market principle. So whenever we are looking at the chart, either on the 1 minute, 2 minute, 3 minute, daily chart, weekly chart, monthly chart, yearly chart, and we see the price for one reason or another, alright, the price going vertical as it did here on the hourly chart of the USD yen, though we are using currency pair, this is valid for all financial instruments. So if you are trading gold, silver, commodity, alright, you are trading futures, you are trading whatever you are trading, this is valid. Alright, so suddenly we see that the dollar yen went vertical. Whenever we see the price going up like this, we start putting a question mark, a bigger question mark on the movement. We want to analyze, we want to know why the price is going vertical like this. Alright, you will see also sometimes the price will go vertical if the market already know the target zone. So the market know something and they want to accomplish it very fast. So very fast they push it up, because professionals do not want ordinary traders to mess up the pattern. So they will push the price very fast, and you'll see the price will go vertical. But going back again to the core discussion here, which is a new market geometry, a vertical move followed by a diagonal move. Let's start again. A diagonal move followed by a vertical move. The price has a tendency to return back to the opposite diagonal. Why am I saying this to traders? To pay attention to this free proprietary trading tool, okay, a new market geometry developed by Stochastic-MACD. All right. We see here that the price went up, okay, in a normal progression. You see here, it didn't hide it. It's there. Everybody can see it. All right. So follow me. This is a diagonal move. Now, you have to understand that, okay, the Friday was, yesterday was the first, which because it's for us. Sunday was the first. Today is Monday, the 2nd of September. All right. The 31st was Saturday, so for us was not open on the 31st. That's why you can't see 31st here on your chart. So we have 30, and then we move straight away to the 1st. So 30 of August. All right, can you see here? This is Friday section. So the price was going horizontal. But you have to notice that on the 29th, which was last Thursday, the price was going up in this session here, 29, and then it started going slowly because the market was preparing for the weekend. So after the diagonal move, the price went horizontal because a lot of traders were preparing themselves for the weekend ahead. So the price went horizontal. What I don't want the video to be too long. All I will say to traders, this is like a gap. All right. So what I'm going to do, I'm going to cover this move here because the market was pausing and was waiting for, okay, the closing candle of August. All right. So the monthly candle for this month of August, the month of August that has closed, is going to close. The price was at this zone. The professional decided to leave it like this, and it was just going horizontal. And then on Sunday, in fact, this currency pair gap up, and now we see a vertical move. The reason why I'm covering this, I know what has happened here. So we have noticed that the price, though we see the vertical move from here to here, all right. I'm going to take this move, which I'm going to move my vertical move and put it here. You understand? Because of the gap here. Though the movement was from here to here, we know what has happened. There is a gap here, all right? So I'm putting my vertical projection here. According to the market geometry by Stochastic-MACD, when the price move, when the price is moving in a diagonal direction, all right, when we have a diagonal move followed by a vertical move, the price has a high chance to return back to the opposite diagonal. But before the price will reach the opposite diagonal, there are other key levels before that, which I'm going to show you here, which you must pay attention to. I hope you are following me carefully. What I'm going to do, going back to my classroom when I was at college, all right? So you see this distance from here to here, all right? This vertical move, I'm going to move it and put it here. This will allow me to draw, okay, my line carefully. So I project this vertical move, pay attention carefully. It may become difficult to some traders if you don't know anything about geometry, but pay attention carefully. So I'm going to draw another equal distance, okay, and you will see. Just stay calm, all right? If you don't understand it, just keep watching it, all right? Okay, so these two lines are the same distance, you see, same length, you see, same height, you see, all right? So I'm going to bring this one back to where it belongs, right here. You have to understand why I put it here, because there was a gap here. This move from here, where my cursor is, up to this level, is a vertical move. You want to see it again? Here it is. This is our vertical move. But because of the gap, this movement from here to here, in normal conditions, should be here. All right, that's why I'm bringing it back here. There is a bit of a distortion here. So we see that a normal progression was followed by an abnormal progression. So there is a kind of distortion to a certain degree. Now with this line, you see how I did it. I'm going to draw another, I'll join this one here. This will allow me to draw my first diagonal. The diagonal of this progression. Okay. Diagonal move, all right, vertical move, okay. The diagonal of this shape is not a rectangle, okay, all right. So here, this is the diagonal of our drawing. Okay, are you following me? What I'm going to do now, I'm going to color it, okay, into red. All right. All right. This is the diagonal of the resultant force. Do you understand? All right, trader don't understand French. La force résultante. All right, you see, price went up. All right, and then in a normal progression, and then went vertical. Now, how do I put this to you? The resultant price movement is this one, the red one here. Up, okay, normal progression, vertical progression. This is the diagonal. Now I'm going to draw the opposite diagonal. All right, are you following me? Before I draw the opposite diagonal, I'm going to do something here. I'm going to extend this line to, before I do my, this to show me where I'm supposed to draw my opposite diagonal. So my opposite diagonal should come here, somewhere here. So I'm going to bring this line back again. So this is my diagonal, which is the red line. Now I'm going to draw the opposite diagonal. Are you following me? You following me? Yes? Let's see, this is my opposite diagonal. All right, I'll leave it like this, okay? I'm going to color it. Very often, I color it into orange. So if you see on my chart this orange, now very often you see I'll put in orange. So there is a diagonal move followed by a vertical move. The normal resultant force, so to speak, is the red line. But the opposite diagonal is the orange line here. The normal resultant force is the red line here. But the opposite resultant force, or the opposite, all right, diagonal is the orange line here. So when the price, we see a diagonal move followed by a vertical move, the price has a high chance to pull back near the opposite diagonal. So we will expect, we are now on the hourly chart, we will expect, all right, the dollar yen to come back to this level. Remember what I said to you, before the price will reach the opposite diagonal, there are other key levels that we must watch. Do not forget them. Do not assume that the price will definitely go to the opposite diagonal. One must acknowledge the other key levels above the opposite diagonal. Is it clear? All right. The other key levels, ladies and gentlemen. You see the vertical move? Whenever we have a vertical move, because I put it here, because there was a kind of a distortion gap here, that's why I put it here. For new traders, you may find it a bit difficult. You may not even recognize that there is a diagonal move followed by a vertical move. Now I'll show you. Once we draw the vertical line, the vertical, you see the distance from here to here, this is exactly the same thing here, which I'm going to color now in green. Pay attention carefully to what I'm doing. So this is our vertical move, which is equal to the price move from here to here. Are you following me? All right, stay with us. I want to know the median line of the vertical move. This is critical. What I'm going to do, I'm going to use Fibonacci drawing tool to highlight the 50% retracement level. This is the line here. This is my 50%, this is the median line of the vertical move. What I'm going to do, here it is, this is the 50%, the median line of the vertical move. Hold on please, I will put it to the correct place soon. Too many drawing, it's a geometry. A new market geometry by Stochastic-MACD. It is not complicated, it's very simple, and anybody can do this, all right? Step by step. I'm going to remove now my Fibonacci drawing tool. Now I know my median line. You see the median line of the vertical move? The vertical move from here to here. The median line is here. I'm running out of colors now. I don't know which color to choose now. I'll use black this time. So this is the median line. So the opposite diagonal is the orange line here. Pay attention carefully, ladies and gentlemen. But before that, we have the median line of the vertical move. Look what's happened today. All right, there you can see it. You see, today, all right, the price, what the price did, as the price was pulling back, you see where it stopped? On the median line of the vertical move. But if you draw your vertical move from here, suppose you didn't know that there was a distortion here, there was a gap here, and you draw your vertical move from here, it's not bad. You will have a different, all right, you have a different median line somewhere here. Are you following me? somewhere here. But now because I move my vertical line, all right, to this place, which is the gray line here, the median line is right here. But look how the market acknowledges that level. When the price is above the median line of the vertical move, it's in a bullish zone. We don't want to just force it and sell it like a mad traders. You need to be careful. Though in normal condition, after a distortion, the market will correct itself, and the ultimate target zone is the opposite diagonal, which is the orange line. But remember, there are other key levels before that, which is the median line. All right, the median line of the vertical move. There is another line also here. I don't want the video to be too long, that's why I'm keeping it very short. The low of the vertical move, and also the high of the vertical move. You see the vertical move from here to here. The low is this blue line here. The median line is the black line. And the high is this one here. But I don't want to talk about that now. I'm going to remove them. All right? So these levels, we want to watch them carefully. In normal condition, all right, without any distortion, without a gap, the low of the vertical move should be above, all right, the opposite diagonal. But you have to understand that because there was a distortion, this time the low of the vertical move is below the opposite diagonal. This is a new market geometry by Stochastic-MACD, based on a market principle that stated that the normal progression of the market is diagonal. A vertical move is a distortion. When we see a distortion, we must acknowledge it. When there is a distortion, the financial instrument will try to rectify itself. It's the same principle like a price returning back to the equilibrium price level, but this is not the equilibrium price level discussion that we are doing here. We are talking about market geometry, a vertical move followed by a diagonal move followed by a vertical move, and price returning back to the opposite diagonal. So where are we now? So the first key level, the price has retested it, so we are watching it. If it did below this black line and retest it and give us a sell signal, we will sell it. We do not sell anyhow. Now we are on an hourly chart. All right. You want to check a higher time frame, at least a 4-hour chart, and then switch to a lower time frame, okay, to manage the trend. So this is where we are now. I can go now to the 5-minute chart, and I can still see all my line on my chart. You see, this is my black line now. You see, everything's here on my 5-minute chart, and I can draw channels. All right, I can draw trend lines. Okay, I can draw horizontal support and resistance on my 5-minute chart. But before I do that, because I'm on the hourly chart, I know that another market principle that stated that the higher time frame commands the lower time frame. Good. Because I'm a very lazy trader, all right, I was, but suppose we are a lazy trader, we don't want to look on a daily chart, we are scared about the weekly chart, we can just say, okay, let's look on the 4-hour chart and see what's happening there, all right? We can see that there is a kind of inverted head and shoulder being formed here, all right? Can you see it? Okay, this is the right-hand side shoulder, and trader were using a kind of projection, blah, 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 all right? So at least we know on the 4-hour chart, there's a 1 key level here, which is also in the zone of the median line. You see the black line? Okay. So there's a key level here, a horse potential. You see the price change direction here. This was a cycle point here, by the way, for TSTWS use your A traders. So here, you see, all right? So this level, this horizontal line, at least we can watch it and know that, okay, though the price may seek the opposite diagonal, is at a support level now, which is the median line of the vertical move, and also a key level on the 4-hour chart. We don't want to discount it. We don't want to just start selling because the price went vertical. Sometimes the price, you will see it like this, okay? It goes vertical. Let's go back again to the hourly chart. My concern is that the video is not too long. Let's see how long I've been speaking to you now. Now I'm over my time. Okay, normally I want it to be under 20 minutes. My apology to traders. But this discussion must continue because I haven't finished yet. All right? Okay, now. Okay, let's go back again to the hourly chart. If there is something you do not understand, okay, and you are TSTW trader, please contact me on my Gmail. other traders can contact me on our website. Click on contact at www.stochastic-MACD.com. Contact me. Sometimes I may take a bit of time before I get back to you, but I always get back to traders most of the time, all right? So if you have contacted me and I haven't get back to you yet, expect your reply for sure. But if you are TSTWSYS or TSTW trader, I usually tend to get back to traders. Or I may post another video on YouTube, or I may post some information on Facebook or Twitter, blah, blah, blah. Okay, I know where to get traders, okay? So you see now, so a new market geometry by Stochastic-MACD, a diagonal progression followed by a vertical projection, a diagonal progression followed by a vertical progression. There is a high chance that the price will return back to the opposite diagonal. We can carry on with this discussion. There are more to this free proprietary trading tool, a free market geometry, a new market geometry by Stochastic-MACD. For day trading purposes, we are on a daily chart. We need to be very careful. But I want to show you another example on another for a stock, Hewlett-Packard. All right. So stay with us. So if you trade stocks, okay, this is it. I want to show you another example. I hope you get the message. We are working with a market principle. The normal progression of the market is diagonal. When we see a vertical move, it's a distortion to a certain degree. We must highlight it. We highlight the high, the low, and the median line of the vertical move. There are other key levels before, okay, the opposite diagonal, as you can see. You will be amazed sometimes. The primary, like as you see now, is bullish because it's above the median line of the vertical move, so you do not force it. It can run from here and continue to move to the upside, but we want to watch it carefully. Sometimes it will take even some days, but slowly but gradually you will see it. Okay, the price will seek, okay, the opposite diagonal. When you see the market is very bullish above the median line of the vertical move, when you see the price displaying a higher low above, okay, the median line of the vertical move, is a very strong bullish signal. Do you get it? All right. So above the black line here, when we receive a bullish signal, it's very, very bullish. All right. But do not stop on the hourly chart, because we're on the hourly chart. That's why we want to know the key levels on the higher time frame. So like this now, if you receive a bullish signal on this hourly chart, okay, because we are above the median line or the vertical move, we want to be curious. Where are the resistance levels? Because we are bullish, we want to know where are resistance levels. We don't want to buy right in front of a resistance level. And also, ladies and gentlemen, as I said to you, the economy news, Google Finance, Yahoo Finance, can change the dynamics of the market. Right now, as we are talking about Forex, we are talking about election on the 22nd of September in Germany. Germany is the major player in the Eurozone. So you are trading in the Forex, you want to know what is happening in Germany right now, all right? So do not play it with technical alone, combine the technical with the fundamental. One of the common trading mistakes, which myself I've done before, which a lot of traders are doing, because I've noticed that majority of traders are technical traders. So they see a technical setup, they validate the setup, and they wait for a signal, and they take the trade. But they don't want to know anything about what the Fed is doing, okay? The inflation decision, the changes that are taking place in Japan, as we have seen recently, okay? The unemployment rate is going down a bit in Japan. There are some, okay, good news coming out of the Japan economy. And you want to know, we are talking about the dollar-yen. We are comparing United States, the dollar, to the yen. So you want to also pay attention to the economy news. If you watch this video and you don't want to know anything about economy news, okay, this is not the right way forward. Go to www.forexfactory.com, go to www.googlefinance.com, go to www.yahoo.com. Free trading, free information regarding, okay, economies, and also on Bloomberg, and also on the Financial Times, okay? I encourage traders to combine technical and the fundamentals. Very, very, very important. Especially if you are trading stock, do not just buy and hold, or buy put option or call option without knowing what's happening with. Are you buying okay, BlackBerry now? What's going on with BlackBerry right now? Okay, they want to sell BlackBerry. There are some changes taking place. You want to know, all right? Okay, and also you want to buy Apple stock and hold. Check the competition between Apple and Samsung, and all the other blah blah blah. Okay. Let's bring on now Hewlett Packard. I want to show you again, talking about a new market geometry by Stochastic-MACD.com. We are talking about the normal progression of the market, which should be a diagonal move followed by a vertical move. There is a high channel. The price may seek the opposite diagonal, but before that, there are other key levels above the diagonal move. I'm going now, ladies and gentlemen, do not be afraid of the yearly chart. We're going to the yearly chart. I have my line already drawn here. You see here? The same thing is happening on all time frame. Very often, what we call a market stable data, these are market principles that we work with, things that remain intact in this messy market. You see here again on the yearly chart, there was a diagonal move, which are highlighted by the green line, followed by, the vertical move. Do you see? You watch this candle, the high is here. All right, so there was a diagonal move, followed by a vertical move, okay? Now, as I did in front of you, I will draw my line, my rectangle like this again. This is the resultant force, which I highlight this time in orange, and I highlighted the opposite diagonal in pink. Look, from this top here, where the price went to, the opposite diagonal. Can you see it? Can you see on the yearly chart? This is a new market geometry by Stochastic-MACD.com, right here, on the dot. Touch it, touch it, touch it, okay, you want to watch it, boom. Now the price is retesting the same level, displaying a kind of double bottom pattern, all right? So you want to watch it, so you want to trade this, you want to buy and hold, you want to, whatever you want to do, go to Google Finance, check the fundamental, check the cash flow, are they making money? What's the competition? The news, check the news, okay, be a bit curious. Do not just take the technical alone and place the trade, and then the next day they say to you that blah, 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 and you lose money. It's not the right way forward. Trader can open, two trading accounts, one for technical trading, all right, spread betting, CFD, blah, blah, blah. But you can also open a proper portfolio where you buy and hold good stock, excellent stock for long term, all right, 5 years, all right, it's up to you. I'm not, a qualified, financial advisor. You may seek better advice, from the professional, all right? So we are talking about new market geometry by Stochastic-MACD. All right, so you see now, so you may say to me, George, is that all? Okay, you want another example? Okay, I can bring another one down, and then I will close the video. McDonald, so I like to go to McDonald. Okay, here it is. McDonald again. I have the line already here. We see again a vertical move followed by, we see a diagonal move followed by a vertical move. The resultant force I highlighted this time in orange, and the opposite diagonal is the red line. Look, isn't it gorgeous to know something like this? Ladies and gentlemen, I will not dwell on this. This is a free proprietary trading tool developed by Stochastic-MACD, talking about a diagonal move, a vertical move, retracement to the opposite diagonal. One must not forget the other key levels above the opposite diagonal. I hope you have learned something very important today, And slowly but gradually, give it a time. Don't just jump on it. Don't get too excited about it. Just try to understand it, think of it, criticize it, challenge it. Try to find some way around it, See whether it makes sense to you, all right? And then take it from there. Until the next time, enjoy yourself and be very happy. We are the TSTWSYS008 traders. Speak to you soon.